Before you can unlock the door to your dream home, did you know that your credit score is super important? Join me as we dive into simple yet powerful tips to improve your credit and get you one step closer to homeownership. Welcome to the channel. My name is Blake Alewelt, owner of the Bravo Ridge Group at eXp Realty. This video is part one of a series of short videos as a complete guide to buying your next home. We cover everything from bettering your credit score to finally closing on your dream home. Sure, it's easy to fall in love with the idea of buying a home. You've got it all planned out, a 5-bedroom home in your favorite neighborhood with a manicured lawn and that nice pool you've always wanted. But if you're going to get a mortgage, and let's face it, most of us do, you'll likely need to improve your credit score. If you're borrowing money to buy a home, lenders want to know you'll pay them back in a timely manner, and a credit score is an easy estimate of those odds. First, I want to lead off by saying that I am not a financial advisor. This information is for educational purposes only and is not intended to be personal financial advice. But if you are in need of a financial advisor, let me know and I can refer you to one. Now let's cover how to raise that credit score as high as possible. Number 1. Pull your credit report. There are 3 major U.S. credit bureaus, Experian, Equifax, and TransUnion, and each releases its own credit scores and reports, which are just a more detailed history that's used to determine your score. Their score should be roughly equivalent, although they do pull from different sources. For example, Experian considers on-time rent payments, while TransUnion has detailed information about your previous employers. To access these scores and reports, annualcreditreport.com is a resource where we can get a free copy of your credit report every 12 months from each credit reporting company. It doesn't include your actual credit score though. You'll have to actually go through each company for that, and there's a small fee. But once you've got your report, thoroughly review it page by page, particularly the adverse accounts section that details late payments and other slip-ups if there were any. Number 2, assess where you stand. This is a simple idea. The better your credit history, the higher your credit score, and the better your opportunities for a home loan. The Federal Housing Administration requires a minimum credit score of 580 to permit a 3.5% down payment, and major lenders often require at least 620, if not more. So what can you do if your credit report is in less than these? Don't panic, there are ways to clean it up. Number 3, how to improve your credit score with error disputes. A 2021 Consumer Report study found that 34% of respondents found at least one error in their credit report. So if you have any mistakes in your report, start by sending a dispute letter to the Bureau, providing as much documentation as possible. You'll also need to contact the organization that provided the bad intel, such as a bank or medical provider, and ask it to update the info with the Bureau. This may take a while and you may need a lot of documentation to make your case, but once that bad information is removed, you should see a bump in your score. Number 4, erase one-time mistakes. So if you've made a late payment or two, what now? Well, call the company that registered that late payment and ask that it be removed from your record. If you made a small mistake and missed just a payment or two, most companies will indeed tell their reporting division to remove this from your credit report. Now granted, this won't work if you have a history of late payments, but for 1 or 2, it can be an easy way to improve your credit score. Number 5, increase your limits. One no-brainer way to increase your credit score is to simply pay off your debt. If that's not an option right now, here's a cool loophole. Ask the credit card companies to increase your credit limit instead. This improves your debt to credit ratio, which compares how much you owe to how much you can borrow. For example, if you owe $1,000 on your credit card, this is bad if you have a total limit of $1,500. It isn't nearly as bad if your limit is $10,000. For simple math, although you owe the same amount, you're using a much smaller percentage of your available credit line, which shines well on your borrowing practices. Number 6, pay on time. If you're often late with payments, now's the time to change. You have the power to improve your credit score yourself, so commit to always paying your bills on time. For those of us who forget when the bills come due, consider signing up for automatic payments, so it's guaranteed to get done. Number 7, give yourself time. Unfortunately, negative items such as those habitually late or non-existent payments can stay on your report for up to 7 years. The good news is, changing your habits makes a big difference in the payment history segment of your report, which accounts for 35% of your score. That's why it's essential to start early so that you're sitting pretty once you're shopping for homes and find ones that make you happy. And that wraps up part 1 of the complete guide to buying your next home. Don't forget to hit the like and subscribe buttons down below so you are notified when part 2 of the series is released. In the meantime, please don't hesitate to reach out if you have any questions. I look forward to hearing from you.